All right, what's good, boys? So today I want to talk a little bit about how you can trade evals more aggressively, how to pass them a lot quicker, and still pass them majority of the time, right? So today I made, I guess 7K, I guess you'd say, across 5 accounts. Again, these were all evals. No trades were taken on either of the XFAs, but we did take trades on the evals, and I want to explain how I just play more aggressively when trading these, so you can pass them a lot quicker instead of wasting time on evals. Right. Our objective at the end of the day on these prop firm accounts is to make money. So as long as you have a back tested strategy, right, and you're actually confident in your model, you should not be wasting a lot of time. Now, I don't know about full porting evals and all that. If you still haven't, had you still haven't found the statistics behind your model, profitable statistics. So, I really only recommend this to people that actually have, number one, money to actually risk just in case, because you are going to blow accounts every now and then. It does happen. The most profitable traders blow accounts. It happens. But overall, make sure that your model is actually profitable, back tested, as well as live trading, forward testing as well. So yeah, let's just get straight into this. So there's 2 trades. I'll show you all the trade I took today, as well as the trade that I took yesterday on both of the evals. Right. So going into this day, right, we have a huge dump overnight. We dumped like 400 points overnight, 330 points, and then off market open, we were still 340 points away to the next draw on liquidity. Most likely, we're not going to push lower. This is yesterday, so I was like, okay, the only like legitimate draw we can have today is a retrace. Like we need a retrace. So marked out this hourly gap, right, so we could retrace up in there, and then we did like a bunch of nothing, right? You could see, kind of just chopped around a little bit, and I finally got a good expansion higher that I was waiting for, and this is a perfect setup. The reason why I would enter right here, okay, because as long as you have a safe stop loss, price action is good, and you have a solid draw on liquidity, it is a good eval trade. It is a good eval trade, right? We are in trending conditions, right? It makes sense. Our draw on liquidity makes sense. It is clean. We have an hourly gap. We're close to it. We're ripping. Right beside it, we got like a 20-point candle. We got a 25-point candle expanding toward the draw liquidity, and we're pretty close to the draw. We're 40 points away. We're most likely going to hit the draw, right? So my thought process going into this eval trade is, yes, okay, we didn't rebalance a fair value gap, but we got we got a somewhat of a retrace to where I can have a safe stop, if that makes any sense, right? Me entering like right here, that's fried. Low-key, that's fried because we don't even have a retrace. Like there's not really a down move where I can have a safe stop. Right here, we could still retrace. When we push up like this, the way that this candle printed, it was very, very aggressive. This is like 10 seconds before the candle closed. If we're going to close like this, if we're truly bullish and we're going to go to that hourly gap that we're 40 points away from, most likely we are not going to run back down after printing this bullish of a candle. We're not going to run back down and tap below this if we're truly bullish. Okay, and stop me out. So I entered right here. Again, safe stop loss. We're in good trending conditions. We're moving. We're not chopping. We're not moving like this. We're actually trending, and we have a good draw on liquidity. We have a really solid draw on liquidity. So this is a trade right here. As you can see, like I would have passed them today, but I talked about this on my story yesterday. So I took these, and then I entered more as we tapped into the gap, and then got out 17 contracts right here. So that was the trade. That's the proof. But ended up taking a few trades afterwards. I don't do this on XFAs. I only did this on evals simply because this is a one. I think this is more of like a 1-to-1. I entered like a little bit later, like right here. So this was like a 1-to-1 trade. You can't risk more than $1,000 on an XF or on an eval on Top Step on a 50K. So I only made like 1.1K on this trade, and I need $400 to get that $1,500 day. I made sure I did this right with my mentor. I asked him afterwards. He said he would do the same thing. So I am sure that this is exactly what you need to do when you're playing aggressive with these accounts. The reason why I continue to take 1-to-1s afterwards is trying to catch that $400 is because no matter what, you are going to have to take 2 more A+ setups. If I just was done yesterday after $1,100 made, I would still need to take another $1,000 day, and then the next day I would have to make $400. So still I would have to make 2 more major, I guess you would say, heavy size wins in a row, 2 days in a row. And that'll be 3 winning trades in a row. I don't want to do that. That's wasting a lot of time, and that's again, like, I'm being more aggressive with these entries. They're lower win rate probability versus my A+ setups. So three of these setups playing in a row, it's kind of cooked. So what I did was I just took like just two random 1-to-1 shorts. One of them risking 500 to make, or 400 to make 400. The next one to make 500 to make 500. And as you can see, obviously I went just back down to break even. The accounts went back down to break even. You can see right here. Yeah, I made 50 bucks. So both of them were back break even, but hopefully y'all understand kind of like the thought process. So if y'all make, if you don't make $1,500 in a day, I would recommend just doing 1-to-1s just to get that, extra little bit amount of money, just so you can pass the account in 2 days. But obviously don't degen, like have control over yourself. Like once I took those two 1-to-1s and both of them failed, trying to get back, trying to get it to $1,500 instead of $1,100. I just got off. Like I'm not going to degen. I was at break even for the day. I took the win and then I risked it right here. Just gambled the profits. It's fine. So y'all got to like learn to just not waste your time with these evals, bro. As long as you're confident in your setup, your A+ setups, your actual model itself, then just be more aggressive with the evals and you're fine. So took this trade, lost those, so break even on this day, but this is just a perfect example of an eval trade, perfect example. And then today, you can see right here, we have this 4-hour gap, right? So this was the target right here, 4-hour gap, and it was this 4-hour gap and these 4-hour highs, if we're willing to go that high. And then 8:30 release. Typically, I do not trade pre-market, so the only times I ever trade pre-market is when there's CPI, NFP, PPI, like huge news releases. That's when I'm okay with trading XFAs pre-market if it's like super A+. Like if this release right here was CPI and we got this retrace, like yeah, there's not an insane amount of structure to it, but like with how close we are to the drawn liquidity, we are going to hit this. Like with the displacement we're getting, we got a good retrace, we have a safe stop. Like this is a really solid trade that I would take on my XFA if this is like a super high impact news event. But it was like core PCE, some like random high impact news, and this is the trade I took, right? So executions as always. So yeah, like off of open, we pump higher, we get a retrace in this fair value gap, and again, I'm just playing off of, okay, if we're truly bullish, right, we got how many points away? We got 11 points away from the 4-hour drawn liquidity, right, the 4-hour gap. If we're truly bullish, right, we should respect this gap. So we tapped in this gap, we got a good nice wick out of it, and the opening of this candle was pretty bullish. So I entered about halfway through, again, just playing the thought process of, okay, most likely we are going to continue higher. We're really close to the drawn liquidity. This fair value gap should respect after us wicking out of this fair value gap, getting a decent retrace. This is a good setup, and it played out perfectly, right? So I mean, you could have played today either way. Like you could have played it, even though this is kind of a weird way. I personally didn't. I didn't want to, but you can kind of play it like this, bro. Even if you really wanted to, like this is like completely fine. Right? Or you can just play off of a gap tap. Like you don't need to wait for confirmation. Like as long as you have a really strong drawn liquidity, I like to wait for confirmation no matter what. But if you have a really strong drawn liquidity and you're really confident in hitting, just take the trade. As long as you have a safe stop, we're in good conditions, and we have a good drawn liquidity. Take the setup, bro. It's an eval. It's an eval, bro. But like something like this, I know some people probably took this off of open. If you were really that confident in the trade, and not in the trade, if you're really that confident in the bias and where we're going. Like again, you get good displacement. You get a good candle closure. Yes, this is off of the news, but like it makes sense for us to go higher at this point. It makes sense. You have a safe stop. Like if we're truly going to go higher, we are not going to run back down after this bullish of a close. Just simple stuff like that. It kind of helps you understand, and as well as like trades where if you don't know for sure if we're going to retrace into a gap, if that's a part of your model where you need to wait for the retrace, kind of like mine. It's kind of hard to show an example, but like if, let's just say we didn't retrace right here, and let's just say that the drawn liquidity is all the way up here, okay? Let's just say we didn't retrace right here. We got another really bullish candle like this. We got another bullish candle. You could just enter like that right here. Even though the stop loss is a bit cooked, like we shouldn't have that big of a retrace all the way back down, but you're pretty much playing off of, okay, like we just formed this fair value gap. It doesn't look like we're going to retrace, but if we do, I have a safe enough stop loss, for it to cover it. You're pretty much, again, just playing off of the fact of, okay, is a drawn liquidity good? Do you really think it's going to hit? That's it. Most likely, if it's a good drawn liquidity, we're going to respect the gaps, and we're going to continue higher. So that's kind of the way that I approach it. That's the way that I pass my evals. And again, both today and yesterday's eval trades are really, really nice. Really unfortunate what happened yesterday, but it is what it is. It's part of it. Just playing more aggressive with these and just trying to pass them quickly. It's part of it. So, and this is like the last eval trade that I believe was pretty good. Obviously, I was already done with the day, so I didn't take it. But at the time, I marked it out, and it was looking pretty good, right? You can see that we have this data low. We have this data low at 8:30, and right, we go up. This is like a 5-minute gap. We ended up barely inversing it. Like right here, you can see we barely inversed the gap, but obviously just being more aggressive to the data lows, because you do play more aggressive to data lows. And data wicks in general, doesn't have to be data lows. Data highs, data lows, doesn't matter. But you play more aggressive to these. So we respected this 1-minute gap. We respected the 5-minute, kind of respected the 5-minute gap. And we're getting, at this point, I want to enter right here. I would enter right here. We're getting good displacement. I have a safe stop loss. Yes, it's before market open, but again, like these small little things that you say, okay, this is what makes it, an iffy trade. This is what makes it, not A+. You learn over time like what makes a good setup on evals and what doesn't through your own market experience. So like small things like this, I've learned like if it's 5 minutes before market open and we get a good retrace and we have a really, really strong draw, especially like data wicks, you can play aggressive to them if we're getting good displacement and we got a retrace, we have a safe stop loss, you can play aggressive to them up to market open. And as you can see, it flushed straight through at market open. You would have banked. So like it's just you have to gain like an eye for it over time, and it does take a little bit of time. You just have to have also the patience to realize like that you can't trade like this on XFAs, right? If it's not a part of your model, like again, you're being more aggressive. You have to have the discipline to only take trades like this on your evals and keep it that way. So yeah, like I believe this trade was pretty fire as well, just because the data low. If this wasn't a data low, this would not be. I would not take something like this on evals. But with it being a data low, got a good retrace. Like I hope y'all are just getting a good understanding of like why this is a good eval trade. But it gets to a point where it can be stupid. Like yeah, we have a draw on liquidity like all the way up here. Yeah, the draw on liquidity was right here. The next draw on liquidity, these hourly highs. This would not be a good eval trade. Based on my model, this would not be a good eval trade because like you're trying to trade inside of a 4-hour gap. We just rejected off a 4-hour gap. Again, that was my target for this first trade. You're trading inside of a 4-hour SIBI, trying to long inside of a bearish gap. Like it's fraud. So stuff like this I would not take on evals. But like just make sure the draw liquidity is very, very solid and we're in good market conditions and you have a safe stop loss. That's really it. That's really it. You got to be more aggressive. Doesn't have to check off every single box of an A+ setup. Just be more aggressive with the evals, bro, if you actually have a proven profit model, and just stop wasting time, bro. That's it. So hopefully this video is able to help y'all understand a bit better how to trade evals, how I trade evals at least, how my mentors taught me how to trade evals, so that y'all can start passing these evals a lot easier and move on to actually making legitimate money with XFAs. So appreciate y'all boys. If y'all have any questions, let me know in the description. But other than that, I will see y'all boys in the next video. Peace out.